Gina Martin Adams, China, Greece, Puerto Rico, technical problems at the New York Stock Exchange. Is this a perfect storm, or is this a passing shower for stocks?
Yeah, my sense is it's a passing shower because none of these issues are likely to become long-term problems for the U.S. economy. So I'm going to go with passing shower for now, with the right to reserve my mind, or change my mind if China turns into a much bigger problem. That's where I think we should focus our worries.
All right. Now, next week, we have earnings season really starting in full. A lot of financials reporting next week.
Right.
So we're going to get back to fundamentals, I suppose. What are your expectations?
We think, actually, that the S&P 500 should beat earnings expectations in the second quarter. We're thinking about 2% growth. The consensus is saying a 3% contraction in earnings year on year. Outside of the energy sector, we likely see most of the S&P produce earnings growth. So steady. Not a huge acceleration, unfortunately, from the first quarter, but steady growth.
In the first quarter, we kept hearing about currency weighing on the top lines of a lot of companies. Will that be an issue again, or is that just a one-time thing?
It's still going to be an ongoing issue, though the pressure abated from the first quarter to the second quarter. The dollar actually peaked in value in mid-March and has trended down since versus most major currencies. So the pressure abated, but international sales growth likely didn't pick up a whole lot. So companies will probably lean on currency as a reason for continued weakness in earnings.
One sector that has continued to do well since the financial crisis has been healthcare. You think that can continue? Why is that?
It's got the strongest earnings growth in the index. So in a nutshell, when you see 10 to 12% earnings growth for one sector and the rest of the index is producing 0 to 2, it looks fantastic. And that's what's really supported healthcare from here for the last 5 years, and we think continues to support it through year end. Valuations
okay, or are the rising biotech valuations, is that weighing heavily on the healthcare side too?
It might weigh on the small and mid-cap healthcare names, but on the large-cap healthcare segment, biotechs are trading at about the same multiple as pharma companies. So not a huge issue for large cap, maybe an issue for small and mid-cap. I'd be more careful at the company level there.
Now, utilities have had a tough run over the past 12 months because of the worry about higher interest rates.
Right.
You actually are neutral, maybe even a little bit positive on utilities. Why is that?
We saw an interesting buy point, I think, as of June. In the middle of June, we got to a point where utilities' extreme underperformance looked so oversold. The rally in the 10-year, the sell-off, I'm sorry, in the 10-year yield looked so overdone that it became an opportunity to put a little bit of money into utilities for long-term investors.
And then finally, usually the strategists say that in order to have a great bull market, you need the financials to lead. Financials really lagged in the first quarter. They picked up a little steam in the second quarter. So are we going to see those results hit next week when they report in earnest? And will they really lead the market forward?
I think financials earnings will lead in the second quarter earnings season, but I'm not expecting financial stocks to lead through the end of the year. And the reason being is I think we still have a lot of work to do with respect to Fed policy. We don't know where the Fed's going in the second half of the year, and financials have done well in the second quarter, trying to anticipate that first rate hike, which may not get here.
All right. Well, thanks a lot for coming on and talking about it.
Thank you.
Thank you for watching The Street.